Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, September 5th, 2019. So today we got the stop pop, the breakout that I was leaning towards yesterday. And again, as I said, if once we pop that level, you'd see an impulsive move, and the reason being because undoubtedly there was a large cluster of stops set just above the August to early September trading range, and so you have all those shorts that get their stops popped, and that's buying. When you have a short trade and you're stopped out, that's a buy to cover order. You're buying the stock that you were short. You didn't own it before. You weren't long the stock. And then you have, of course, the longs that pile in on the breakout as well. So the million-dollar question remains: will I be right? Is this will this prove to be a false breakout, aka bull trap? And if so, what we need to see, of course, is we need to fall back down back into the channel and do so impulsively. And if not, then it's breakout's a real deal. So what you're bullish and looking for new highs, what you might look for, if you get it, would be a back test of the range there, and a backfill of today's gaps. Gap, I should say, that would be an objective long entry, or gap, so we have SPY as well. Whereas bears, like I said yesterday, one strategy, and I mentioned it today on the site, two options. If you didn't have any positions coming into the day, and I'll talk about that in a minute, but if you didn't have any, you could either short the pop if you suspect, as I do, that it may quite likely will prove to be a failed breakout, and then you're getting a higher entry price, and you can do so with a very tight stop above today's highs. Anywhere, it depends really what you're targeting. Now, if the bear trap scenario plays out, bull trap scenario, meaning over the next several trading sessions, it could be tomorrow. I'm going to talk on that in just a second here, some things that to look out for tomorrow, or early next week, sometime next week, and you move back down within the range and impulsively, then that should have longer term bearish implications, because as I say, fewer things are more bearish than a failed breakout. It hasn't happened yet. We're not even close to having it happen yet. But if it does, then I wouldn't be looking for just another run down to the bottom of the range. At that point, I think it would be pretty clear, because of what happened, that we'll just shoot on down and probably break down through there. But unless that happens, here's the levels to watch. You have today's gap, of course, the top of the gap being where we opened today on QQQ and SPY, and then the bottom of the gap really being, well, in QQQ it's a little below, but we still have that 189-ish support level, the top of the August trading range there. So those are your support levels on a pullback to look for. So those looking to fade the rally tomorrow or today, if you put a short on, those are the initial targets. And of course, then it all depends on your view. If you think this may prove to be a bear trap, like I think it might, then you're looking, might as well just set a stop somewhere above today's highs and let it ride. Again, a lot of ways to trade the market. So that's what we're looking at on QQQ. On SPY, let's see if they fixed this candle yet. No, they didn't. It's weird that, in this charting program here, they show you the correct levels here on SPY. SPY gapped up here to looked like it opened around 296.78 today. Yet TC2000, they haven't fixed this candle yet. It shows a perfect backfill of the gap at 294. SPY did not trade down to 294 today, so that's an erroneous candle right there. That's showing a low of exactly 294. It's almost as if they pulled it right to my support level there, which is the former resistance, now support, the top of the August range. So again, just this candle looks something more like cut off that bottom part of the body there, and that's what you're looking at. Let's talk about levels. All right, let's go back to QQQ, because to me that's the more important index, even though it's not as diversified. You can see I have a line here at 191. What's that all about? Well, we closed a little bit above it, and that's a pretty important level, because I talked about this before. On QQQ, you failed there on multiple attempts for over a week there. Failed there again. You finally gapped away, gapped above it, broke out, and that was a breakout to new all-time highs. So this whole thing was a breakout to new all-time highs right here. We back tested it successfully on 3 consecutive candles, closed right on it, that red candle there after a brief dip below, and then the next day we gave it up, and that triggered that waterfall drop. Pretty impulsive sell-off right here, back into the lows on August 5th, I believe it was. So that is a significant level. We closed above it today by a little bit, and again, a lot of short covering, to be expected. A lot of bulls probably jumping in, and so we'll watch that level tomorrow as well to see if we can hold above it. So I still favor that scenario, and we'll just have to see what happens over the next couple trading sessions. Tomorrow, of course, being Friday. So let's talk about a potential catalyst. I mean, a lot of it seems to me everyone's chalking up the catalyst to this breakout being the White House announcing they're going to meet with China in October just to have talks again about the. And to me, that's a non-event. Obviously, they're going to continue talking through this. Sooner or later, they're going to have to come to some kind of resolution. It doesn't matter because the charts were already indicating that we'd pop above it. Just the fact we're pushing up there. And again, take it for what it's worth. It was certainly, we'll call it the catalyst that popped us above there. But again, the technicals were already in place for that pop above. So let's see if we get that reversal. Like I said, I have actually no doubt at all that a lot of short interest was cleared out today. So it's just a matter of how much. Was enough short interest cleared out that sets the stage for this market to finally go down? Maybe, maybe not. Maybe we go to new highs from here. So we'll know soon enough. That's a good thing. We should know if it's breakout's going to fail. It should happen sometime by the end of next week. Sooner the better. And where I'm going with this, when you go onto the site, right side of the chart.com, if you come under resources here, click this link, it takes you to the support center. And down below we have, I have tools of the trade, and this is the big one here. Click on the economic calendar. It'll bring you to the Econoday economic calendar. And so here's what we have tomorrow, and this is what we're going to be watching. Jerome Powell speaks at 12:30. We've had kind of back and forth numbers today. We had what was it? The PMI Services Index. ISM Non-Manufacturing Index. So if you guys remember, and I talked about this the other day, we had the ISM Manufacturing Index. Now, what's the difference? Well, that's manufacturing, things that are being made, cars, whatever it is, things that are being built. That number came in below expectations, and at the first contractionary level in a while, came in below 50, meaning contraction. Any number below 50. Now today we had a hot ISM non-manufacturing index report. Those are services like any type of service sector, constructions in there as well, and so forth. Now tomorrow we have the employment situation report. What I'm getting at here is this was a hot number today, and if nothing else, that has to skew the odds of the market lately has been torn, or at least pricing in either a 50 or 25 basis point cut. Obviously, bulls want to see the 50 basis point, 0.5% cut. I wouldn't say it's off the table yet, but with the hot numbers today, and let's see what happens tomorrow with this report. You have the employment situation. The stronger the economy is, the hotter these numbers come in. It should tilt Powell and the Fed towards maybe that 25. I don't think no cut is on the table. We're going to get, I believe, at least a quarter point, but it might pull that 50 basis point off the table. And the market's not going to like that. They're going to any time the Fed becomes a little less dovish, they're going to hang on his word. So again, just watch that. He starts talking at 12:30, 8:30 in the morning before the market opens. You have the employment situation, non-farm payrolls, unemployment level, all that good stuff. This is a big report. And how this comes out will affect, right now the market doesn't seem, all they seem to care about is rate cuts, and how much are we going to get. So again, a potential catalyst, and it could go the other way. It could be a catalyst that the breakout today follows through to the upside. So we'll watch that tomorrow. So let's talk about a couple of levels. Well, that's it. There's not much more to watch. We continue to build on this. There's not a lot of resistance. I just showed you the QQQ level that needs to hold. SPY, let's go to that real quick. And again, we still have that false candle there, but you can see where we closed. That's all that really matters. We closed up here, and there's certainly some levels there. Let me show you something on the 60-minute charts that I shared today with members. All right, this is the NQ, the NASDAQ 100 E-mini futures, 60-minute chart. Well, hit the pause button by mistake. The big levels here, of course, was the biggest level, the top of the trading range right there. Very, very well defined. And if you can notice here, I posted today we have yet another divergent high. So we're going back here on this chart all the way into July when the market topped. It topped with a divergent high. Right after that, we had sell signals triggered. On the daily chart, you don't see the support levels here, but we had that breakdown. And from there, here's what happened. So divergent high. The next divergent high we had on the 60-minute chart, you can see right here, there's your negative divergence, correction, divergent high correction, divergent high correction. We did break out today, but we did so with now another divergent high on the 60-minute chart of the futures. And so therefore, right now, and I always say this, divergence, just like overbought conditions, is not a sell signal, but breakouts that occur with negative divergence and while overbought as well tend to have a higher failure rate, a much higher failure rate than those breakouts that occur without divergences or without the security being overbought. So what we need to watch right now, it's to me pretty simple. Well, it's one thing to watch among many, but here's an uptrend line, pretty well-defined uptrend line. Remember, the divergences, the sell signals came on the breaks of these trend lines, or in this case, horizontal support. Sometimes you have a trend line to watch, sometimes support. And as I mentioned, each and every time we hit that level, it was an objective shorting up because you bounced into resistance. This time around, like I said, it was certainly objective to short yesterday, but I suspected a pop at this point. The way we've been walking up here, it looked like this market wanted to make a run at those stops. I thought we were going to get it here last time, but we never really did. So that's it. We can work our way up here. There's a little room to continue higher and extend these divergences, certainly. And let's look at ES, the S&P 500 futures. There you have it. Same story, 60-minute chart, and go back to the highs, and that was marked with a divergent high correction, divergent high correction, divergent high correction, divergent high correction, and now we have negative divergence once again. So we'll see, and we have a pretty clean uptrend line also in which to trigger a sell signal if broken. So that's it. Here's your divergence right here, and you have smaller divergence right here, like I showed you on NQ right here with the this lower highs in the indicators right there. So there's your small divergence, and then if you span it all the way from here to here, you have some PPO divergence as well. So what would that do? What would it look like? At minimum, if you're going to try to swing trade it back, at minimum probably a back test to the ranges recently, the recent trading range, the August trading range there. And again, if we go much lower impulsively and we don't whip down, anything but a little brief whipsaw, that's possible. And that's actually pretty common. To come in and make a perfect test, it's possible. The market's been behaving very well to the technicals recently, but that's what I'd be looking for. And if we get it, impulsive move back down, the lower we go here, the more we put that in the rearview mirror, the greater the chances we're just going to keep going down. However, a breakout is a breakout unless proven otherwise. So that's what you have right now is a breakout, and maybe we backtest, maybe we don't even backtest. I favor it, but again, there's your sell signal if and when we get it. We also reversed right on that 285.91 resistance. You can see the reactions here on this trend line here. Quite a few reactions there. So those are levels to watch on the futures. Okay, and now we'll talk about hedging. We'll keep this video public content, just general stock market analysis, what I think is going to happen. I'm not going to get into detail on these next assets here as far as targets and all that go, but I have mentioned both on these public videos and on the site recently, as it looked like there was a good chance we'd pop this. And one thing I knew for certain, if we did pop that level, we wouldn't limp through there. It would be a lot of stops that would cause an impulsive move up. And as such, I took proactive measures to hedge up my swing trade short on QQQ and NQ. I active trade in an active trading account, and then I have swing trade positions that I'm still holding tight for now. And so the Qs were down 1.83%, and then the hedges that I have, as I've mentioned, are Treasury bonds via ZB bond futures. And you can see we were down more there. What was QQQ down? Let me go back. QQQ was down 1.83. So TLT And I take normally, and I've talked about this a lot, if I'm shorting treasuries or going long treasuries for that matter, I take 2 to 3 times easily what I would take in QQQ, because treasury bonds are much less volatile. They're inherently less volatile. This happened to be a big move, and this alone offset it. And of course I have probably 3 times in TLT what I have on the swing shorts, and so that more than offset the losses there alone. I mentioned silver, also being short silver for many of the reasons again discussed both on the site just simply as a hedge, but again it was in the technicals, and I covered that in the earlier video for members. I put up these charts with targets. Silver alone was down 5% today, and gold. To me, this was a no-brainer trade. In fact, I'd been short. It wasn't working so well up until today, but I had very little doubt, almost zero doubt, that if we popped those levels on the markets, that's a breakout. And as I said in the video to members earlier today, in my opinion, the breakout today in the equity markets above these levels in SPY and QQQ, I believe this is probably the most widely watched and acknowledged level in the last several years. There were other levels, other breakdowns that I see sometimes, trend lines and things. When we shorted here, when XLK broke down right at the highs, I mentioned that was my sell signal, go short. But I think probably a lot of eyes didn't see that. That was the breakdown again that I mentioned in XLK. But right there when we broke down, that was the gave us this 9% drop. And then for the reasons I stated, covered those swing shorts there, went long, and then back short, scaling in here to here, and then on every, on the bounces back to the top of the range. However, that might not have been as obvious as these levels on QQQ and SPY. And so therefore, point being, we've seen you had a tremendously overbought and overcrowded trade in treasuries. We haven't seen a rally like that. That's one of the strongest rallies we've ever had in treasuries. And so therefore, a breakout in the stock market is obviously bullish, and therefore, all I see that, and that would pop the bubble, or at least let some air out, I should say, of that risk-off trade. So not only that, but both treasuries, gold, silver, they were all lined up. They had negative divergences, overbought, and so therefore that's why you had such a drop today, because they are the king of risk-off assets, and today was a risk-on day. Risk-on meaning speculative stuff, high growth stuff, technology stocks. I think somebody on the site mentioned the marijuana stocks were up today, which I'd imagine. Sure. MJ's up 4.32, the king of crap stocks, speculative stocks, and you're going to see things like that run up today. Small caps, of course, and things like that. So that's it. I don't want to spend much more time on that. I'll be beating a dead horse. We'll have to just see what happens from here. Now, as I mentioned earlier today on the site, I'm going to sit tight on my hedges right now, because I can't tell you with the highest degree of confidence or any degree of certainty whether this is going to prove to be a false breakout or bear trap. So the possibilities there that we continue to rise from here, or we come on down, we back test successfully and then rally up. So I'll sit tight on my hedges for now. It's working well today. Like I said, I had a very nice day with those, as much as those things were down. And at some point, if I get the confidence that we are going to reverse, I'll scale out or just dump those hedges, cover those shorts on the precious metals and treasuries, and then that will give me back a naked short position, if you will, on the Qs. And likewise, I said as well, we start to just go on up through here and build on these gains, I'll just start scaling out of QQQ, but I will not flip to bullish for many reasons. But I don't think the risk reward is favorable at all. And one big part of that is that big run up in treasuries and gold. In fact, I cited an article in the Wall Street Journal today. If you're a subscriber to the journal, or let's see if I still have it up. Nope, I already moved off it. No, yeah, maybe it's, yeah, it is. Let's. No, that I moved off that article. Anyways, all it said is the same thing that I've been saying, that the run up in treasuries and gold could mean nothing less than investors, a lot of people, a lot of market participants are extremely concerned about and expecting a big drop in the stock market or turn down in the economy. Otherwise, treasuries would not have had such a strong rally. And again, I've always said, bond market much more often than the stock market is right when the two are telling you two different things. So you have that stock market near all-time highs. Yes, today there was a correction in treasuries and gold, but it's still way up. They're still way up, and so again, that's a red flag to me. So I don't always have a position in the market. So you can be long, short, or in cash when it comes to the broad market. So that's what I'm looking at. And again, let's just see how the next few days evolve here. Tomorrow, maybe we'll get some cues after the employment situation report at 8:30. After Powell speaks, maybe we won't. It could take. Like I said, I think if the breakout fails, it'll happen within the next week. To me, the sooner the better. I didn't expect it to fail today. There are just too many stops to be popped, too much bullishness right now. And so anywhere as early as tomorrow into the end of next week. And again, at this point, I'll just, like I said, assess things as they go, and we'll pick it up here tomorrow. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.